How's it going, fellow traders? It's Magic Trader here, and this is the CFTC data for February 15, 2019. Here is a snapshot of the positions held by the institutions as of that date. And so let's take a look at gold. Okay, so the data that we have here represents this big tall green candle right over here. Okay, now what is needed to cause price to move up into supply? You need demand, so you need long orders to be filled, and that's exactly what we see here. Longs increase from 212 to 218, and at the same time we see a slight decrease in shorts from 112 to 109,000. So since this data, we see that price has consolidated and then made a further move to test this weekly area of supply. So the next Friday's data will include up until this candle right over here, which will be pretty telling because we'll see whether or not they start to accumulate those shorts within this consolidation, or if they're just going to continue adding longs in order to get this push up into the weekly area of supply. Nonetheless, this increase in longs was to be expected, so that's what we saw, an increase in longs causing price to walk up into supply, and now there will likely be a reaccumulation of short positions. So we'll see in the next few weeks' data if that is indeed the case. I suspect it will be. Alright, now we take a look at oil. What do we see with oil? We see that price was consolidating right after the weekly area of supply was removed. And what are they doing with their positions? They closed some of their longs from 499 to 491, but they increased their shorts quite dramatically. Take a look at that, from 158,000 to 170,000. Now, I've been saying for quite some time now that what I believe is in the process is the institutions are going to push price up into these areas here. Somewhere in this area, could be here, could be up here, we don't know, but somewhere up in this area they're going to push price, and in the midst of this move up, they're going to start accumulating a larger short position. That's what I suspect. We can see that since the summer, okay, they have been switching their bias slightly. Take a look here, okay? Look at these numbers and look at them now. Look how cooled off shorts were, and now look at what they're starting to become. Okay? I believe this is going to continue. This momentum here in the shorts are going to continue, and we're going to see these numbers continue to build even higher. So we'll wait and see if that is what's going to indeed take place. Then we have the US dollar. This one's a tricky one. We have a second test of the weekly area of demand here, and if you take a look, you see them closing off some of their long positions and closing off some of their shorts. So we're not seeing anything concrete in terms of the data here and in terms of the positions. Okay, what I'd like to do is, and what I've done with the members this past weekend, is we took a look at the euro and looked at what happened during some phase of consolidation. And we can do the same thing here as well. For instance, we could do this really quickly. Let's take a look back to, let's say, September, beginning of October to now, and see what has taken place. The beginning of October is right here. So let's take a look at the data, and what do we see? We see that longs were 43,000, and now they're 45, and we look at shorts, they were 6, and now they're 14. So during this consolidation phase, what we can say is that longs have increased by about 2K, which is not much, and shorts have pretty much doubled. Now, does that mean price is going to drop like this? Not necessarily. In fact, it doesn't really tell us much, because starting January 1st, which would have been around here, is when we started seeing this big increase in short positions. So this increase in shorts causing price to go down could be just to help stabilize price at these levels. Hard to tell. But when you take a look at the Euro US dollar, you'll see that it's a little bit more clear what it is that they are doing. So let's move on And we go over to the Aussie US dollar. And this candle here, after breaking through the weekly area of supply, is the data that we are looking at. And we can see longs closed from 21 to 18,000 and shorts increase from 53 to 54. Now, I've been saying for quite some time that I suspect we are eventually going to get more weakness here. And so obviously that would mean we'd need them to close off some of those long positions and start reaccumulating a short back up to these levels. Is that going to take place right now? It's possible. You know, if we take a look at the numbers, 60 to 58 to 53 to 53 and now up to 54, I mean, it's been kind of sitting around that level for quite some time. You know, pretty much since the contract expiration here. So it's early to tell. It might be the start of an accumulation of a short position. We can see similar situations taking place on other pairs. That might be what is about to take place right now. We take a look at the US CAD, and it's this candle that dipped deep into the weekly area of demand, testing the ascending trend line on the weekly chart. And we can see that they closed off longs from 72,000 down to 61,000, and they increased shorts. So increased shorts, which causes price to drop, and closing longs also causes price to drop. And then we see this big candle going down into the weekly area of demand. Likely what we're going to see in the coming weeks is a reaccumulation of a long position. We see that back in July they were very long, and that takes us into this area here. Okay, an accumulation of longs, taking profits, and then in September, October, they reaccumulated longs up through here. Okay, January was the strongest up here, and taking profits, probably reaccumulation, see these numbers go back up again. So we'll wait and see for the next few weeks' data. US dollar, Swiss franc. This candle of consolidation after reacting from the ascending trend line, and what do we see? An increase in longs from 24 to 27, but they also increased shorts during this phase here. Curious to know why they had increased shorts. Maybe to help stabilize price? It's possible, because you can see price was stabilized here as they were increasing those long positions. So it's likely that they are going to reaccumulate a larger long position for a bigger push to the upside. We can see that they were very aggressive here with their longs up in the 53s. We look at the numbers now, lots of room to increase, and if these numbers stay low, you know, you can add another 20,000 and change until we get to their peak positions. So looking good so far for those longs. Euro US dollar. Now this is what I was talking about in regards to the Euro US dollar. We were examining this block of data, and what we could see was that longs decreased from 164 to 145, and shorts increased from 171 to 197. So essentially what we can say is that during this consolidation phase here, the institutions have been focused on accumulating a larger short position. And the quickest way to see that is by just examining here the net positions. -7, -51,000 positions during this consolidation. Okay, during this sideways action here. So you can clearly see what they're doing, right? During this whole phase, look at these numbers. Big increase while maintaining price sideways. That's exactly what they like to do, because if they did this under a short period of time, it would just cause price to drop like this, and they don't want to be accumulating shorts at lower prices. They want to accumulate it at the same price for the eventual move to the downside. So looking good for shorts. Now we go over to the pound US dollar. What can we see? This candle here as it reacts from the weekly area of supply, and we see that they close some of their longs and they close some of their shorts. So we're not seeing much. And you look at the sentiment here, it used to be somewhat bearish, now it's turning a little bit more neutral, and looking at these numbers, it's dropping. So very difficult to read this chart. We have action here looking like it's going to go higher, but you know, I'm not too sure. You know, considering what we're seeing with the euro and the dollar, that might not be what is going to take place. So looking for more concrete evidence in terms of the data and the technicals to suggest a direction. US dollar, Japanese yen. This one's been very tricky. Very tricky because, we typically look at non-commercial data, but over the last few weeks I've actually been really concentrating on the commercial data as well, because it's been very apparent that what this side has been doing is helping the other side, non-commercials, with their positions as well. Okay, so let's take a look here. Now we see a candle of consolidation here before and move to the upside, and what has been taking place pretty much since December? Price dropped and they've reduced their longs quite significantly. Okay, so what happens when longs get closed out? When longs get closed, you see a big drop in price, and that is what took place. But guess what was happening down here? Commercials were buying it up at low prices. Okay, so you look at shorts, it's very cooled off. Longs have been closed off with this big drop. Now I'm waiting to see if there's going to be a reaccumulation of long positions to cause price to head higher. And now we go over to the Kiwi dollar, and we can see that there's been some major consolidation here. And again, it's around the October area here, negative 30,000 to somewhat neutral, right? So during this consolidation phase, the institutions have become somewhat neutral with their positions. They used to be heavily short, cooled off on the long side. Now they're becoming less aggressive with shorts and still somewhat cooled off on the longs. A slight increase, but not too much. So what is going to take place? Well, it's hard to say. We have supply here, demand here, no strong bias here. We have neutral bias here. Very difficult. The data is not suggesting anything at this point, so we have to ignore trading this chart. All right, ladies and gents, that's the February 5th, 2019 data. I hope you have a good one, and we'll see you next time. Take care.